This week's been kind of a crazy week. I feel like there's a lot of fear out there. So I wanted to take a look at the overall market. Yes, we're going to analyze SPY. We're going to look at historical data and SPY, some of the holdings on SPY, and try to figure out what's going on there. But we're going to look at a whole bunch of other sectors as well and just kind of step back and take a look at the big picture. So if we look at SPY on the daily, I had done a video about a week and a half ago and we were watching this SMA 100 as the first level. So we actually did break this SMA 100. Friday, we had a relatively green day, but we did hit a lower low. So just because the day was green, we didn't get beyond the top of the day before. So until we see a break of the high of the day before, which would be that level, then we will just continue in this daily downtrend. So going back to the levels that I had pointed out in my earlier analysis, we have come down on the weekly chart close to that EMA 26 level, which is 426.35. So we haven't hit it yet. So there is some more room there. So that was the second level that we were looking to possibly get some support on SPY. So that's a look at just what's been going on in SPY over the last little while. But what I want to do now is sort of go back in time a little bit. So we're going to go back to 2009, and this was right after the 2008 crash or correction, whatever you want to call that period. And we basically started following this trend line. This is a pretty solid trend line, and this trend line went all the way up until the last time we bounced off it was December 2018. So you can see it was repeated touches of this trend line, and then we bounced. So here, this is the COVID dip. We went all the way to the trend line, went through the trend line. Then we recovered a little bit. Each one of these candlesticks is a month. So this month, we recovered from that dip, and just from that point, we've skyrocketed. So it's just interesting that since 2008, we've pretty much stuck on this trend line. We've had some bounces where the market has gotten high, or where SPY, I should say, has gotten high, and then we've come back down to reality. But where we're at right now is just like it's pretty high off of the trend line, which should be basically the course of this ETF, which we are looking at here. So why did that happen? Why did that happen from this COVID dip? Why have we just skyrocketed? So I just want to take a look at the holdings in SPY, and then maybe that can get a little bit more clear for us. Okay, so here we are at ETF.com, and I'm searching up SPY to try and see a little bit more detail on SPY. Now, in case you don't realize what it is, SPY tracks the index of the SP 500, so the Standard & Poor's 500 index. So basically, this is reflecting that index. So what are the holdings in that index? So if we scroll down, top 10 countries, obviously, United States. And then if we come here, top 10 sectors. So this is good knowledge to know, because this is the sectors that all the companies are in that we are tracking. 35% of this whole entire ETF right here is technology. So when tech goes down, SPY is likely going down with it. I mean, likely. It's not 100% guarantee, because we also have another 70% of these companies that we're tracking in different sectors. So consumer cyclicals, that is basically stocks that travel with the overall market. So that's another area of when the market's going down, that these stocks will likely go down. So if the technology sector is going down, then the consumer cyclicals are likely going to follow, because it's a correlation and they generally will be correlated together. Now, financials, that's a significant portion of this ETF as well, which is 13%. Healthcare, and then now the rest of them just small numbers. So if we scroll down here, the top 10 holdings, now these are the actual companies. Apple is 6%, Microsoft, Amazon, these are our biggest ones. Nvidia, which obviously most of them are tech. But then we have some financials here in the top, and then we have Tesla. So when these companies are suffering, then you're going to see SPY suffering. So getting back to the chart, and why did SPY just completely go ballistic after this COVID drop? So if we think about the psychology of the market at the time, the world pandemic was pretty scary. And so basically the market just started really dipping heavy based on fear, which does drive our market to a great extent. Fear and greed. So here we have the fear kicking in. Everybody's just basically selling all their positions and trying to liquidate out of the market. But then things start to get a little bit out of control and under control. And then we see that the market is starting to recover. Things aren't as bad as everyone thought, and maybe it was just a little bit of an overreaction. So people start looking for places to put their money. And our world has changed at this point. People are now working from home. There's a lot more teleconference software needed. A lot more people are doing online programming and things like that are needed. So technology really takes off through the roof. And we just looked at the fact that technology is a very big holding of SPY. So that could explain this crazy launch which we had after the COVID dip. So now we just have to ask the question of how far down are we going to retrace after this crazy move? The answer to that question will only come in time. We need to see what happens with the chart and what happens going forward. We can't make predictions because where we're at right now is very different than where we came from. So what I want to do right now is just sort of compare the whole market and not just SPY. Let's look at the monthly charts and look at some correlations and see what we're looking at through the rest of the market. And now, knowing what we know about the tech companies and the tech being a big portion of SPY, let's go look at the tech sector. So this is the SPY monthly chart. You can see how we pull off right here off the trend line that we looked at. If we go over to QQQ, it's not really that different. The charts are very similar. QQQ tracks full technology sector, but a lot of the companies that are in QQ are also in SPY. So we're going to see some correlation here for sure. And correlations are often found in lots of places in the market. The correlations are not always the same. Sometimes certain sectors will move together, and other times certain sectors will be inverse of each other. So basically what I'm trying to look at right now is the sectors, how are they correlating, so that we can get a big picture look at the overall market and not just look at SPY. So after looking at QQQ, let's go over and look at XLF, which is the financial sector. So there's a difference here because you can see that we had a hard drop and we have recovered pretty good in XLF, but QQQ didn't suffer as hard as XLF did, and it was at a different time. So we're not entirely correlated in the financial and the tech sectors. So back to SPY now. Let's see how SPY has been correlating overall to the healthcare sector. So that's just clicking back and forth on the monthly time frame so we can compare. That's pretty close. The healthcare sector looks like it's correlating pretty close with SPY for the most part. Okay, so back to SPY, I'm going to now take a look at biotech. How is biotech comparing and correlating with SPY on the monthly time frame? And here we go. Now that doesn't look very much like SPY at all. So we're not seeing a lot of correlation with the biotech sector. This is actually kind of looking a little bull flaggy actually, now that I look at it. Not really bull flag, more like a wedge, or depending on how you want to draw it, you could draw it like that, or you could draw it like this. And now we're looking at a pretty nice flag. So biotech's one to take a watch of at this point. It's looking quite different from SPY, which this is a complete ascending wedge, which is a bearish pattern, which we generally pull back from. The biotech sector is not looking like SPY at all. So there's one sector that's really not correlating with SPY. Looking at correlations, let's go see how the small caps are correlating with the larger caps. So we'll look over at IWM this yellow line represents its all-time high. We can see it really doesn't look like it's correlating to SPY right now. Yes, it looks like it's kind of going sideways the last little while. I wouldn't say we're pulling back. In fact, this is looking definitely wedgy. Right here. Now remember, each one of these candlesticks represents a month. So you can see, obviously, we're going to have this right now because we just started this month. So let's go look at the weekly. Still looking wedgy. So everything could change in this month and we could completely break bare from this pattern. This doesn't mean that it's going to be a bullish pattern, but it can possibly be a bullish pattern. So IWM, the small caps, is one to take watch of. I do have some holdings in the small caps because I know a lot of them are in need of some recovery to get back to the pre-COVID levels. So this is kind of one of the areas that I've been watching. And just a couple more sectors I want to quickly look at. Let's take a look at solar ETF here. And we can see we have a very different look here than what we have with SPY. So there's not a lot of correlation with the solar sector and SPY. When SPY continued on to all-time highs, we had the solar sector pulling back pretty hard. So one way to look at all these correlations is that these different sectors, yes, they've done their own things at certain times. Sometimes they correlate with SPY, sometimes they don't. But most of the time, as long as SPY has been hitting new highs and has been strong, then these sectors have been able to sort of do their own thing. But now that SPY is pulling back hard, then all of these sectors should be pulling back hard because we should be seeing overall market weakness. So I want to go look a little bit closer at the daily charts in some of these other sectors and just see if they all are pulling back on this market weakness that we're seeing in SPY. Here we are, we had this daily inside bar, doji, and that's how we closed. We had a lower low on Friday. So going over to QQQ. Very similar. It's almost a hammer, but we did have a lower low on Friday. Then going over to XLV, which is the healthcare sector, almost a hammer as well, definite lower low. We hit pretty good lows there. Then going over to XLF financial, almost a double bottom here. Let's just see. We didn't hit a lower low on this chart. The financial sector, we were a few cents above the day before, so that's notable. And let's go over to metals and mining, which I don't think we looked at the monthly here, so we'll look at that briefly. We're looking like a little bit flaggy here on the monthly. And if we switch over to the weekly, then the daily, we didn't hit a lower low on Friday with this one like we did with SPY. Over in solar, we definitely didn't hit a lower low. We hit a higher low and a higher high on Friday. So that's quite a bit different than SPY. One that I forgot to look at on the monthly is XLY, the consumer discretionary ETF. And we can see that we have been very, very strong. We haven't seen the same pullback in XLY at all compared to SPY. If we switch over to the daily and look at SPY's daily, SPY we've pulled back, XLY we've pulled back, but on our pullback, we didn't break our daily trend. This looks like a healthy pullback. And if we look at our SMAs here, we bounced off this SMA 100. So far, so good on this one. XBI. Now, this is the biotech, which I noted in the monthly. It looks very, very different from SPY. But we have had weakness in our last few days, just like SPY has had on the daily. but we closed, yes, a lower low. This is actually looks like a dragonfly candlestick, which can be considered often a bullish reversal. It can happen. It doesn't necessarily mean that it will. And if we look at our SMEs, so we were getting some strength back into biotech. We made it over the SME 100. We didn't go any higher, like we kept hitting resistance right up around this level. And then now we've rejected, but we haven't come back down below this low. So we could still consider this a healthy chart. So this could definitely be the start of a reversal in biotech. So I'm going to keep my eye on this sector. So I can't look at every single sector, but I'm going to just look at one more. So this is the airlines. This ETF tracks the airlines. There's not as much history here as SPY, but we can see if we just look from here, the COVID dip where we dipped hard and we compare that to SPY, that's what we're comparing right there. So we dipped hard, but we haven't gone to the levels that we were pre-COVID. And then we can see that SPY definitely has, after the dip, has gone way beyond, as we've covered earlier, way beyond the levels pre-COVID. So we can see that the airlines have been a lot weaker than SPY. We have started to recover a bit, but we have not made it to our pre-COVID levels. So if we flip over to the daily, look at what happened on Friday here. Completely different than what happened to SPY. We had a 5% gain and a break off of this EMA 12 here, which was a falling wedge. We broke over the SMA 100. So this is considered a bull break. And now we're looking for some continuation to see if we can get continuation in this sector. So I'm actually going to take a look at some of the tickers in this sector individually, so we can see if there's some setups going on and things that we can keep an eye on. And one last thing to note about this ETF, the airlines ETF, is look at the amount of bull volume that we had on Friday. So this is definitely one to keep watch of. Also, I just want to wrap it up now because it's been kind of a lot of individual sectors that we've been looking at, but I hope that this big picture just sort of gave everybody a little bit more clarity. For me, my whole thinking is that I'm not seeing overall market weakness everywhere. I do see it in the SP 500. I do see it in the companies that went ballistic after the COVID, but I'm not seeing it in the areas in which we still have yet to get back to pre-COVID levels. So I think that there's something to be said for just looking at the whole market rather than just watching the SPY ETF. Yes, it's important to keep an eye on SPY, but there are a lot of other areas that we should be watching as well. So that's a look at the overall market. While I was doing my whole market analysis, and I think I mentioned this, the travel sector, I noticed, looks like it's pretty primed. So this inspired me to do a video on the setups that I'm finding in the travel sector. So if you're interested in that video, I'm going to post the link in the description. If you have any suggestions or ideas for videos or any tickers you want me to analyze, please leave it in the comments below. I hope you enjoyed this video. If you want to see more videos, please be sure to subscribe. If you want to see what I'm doing during the day, I'm usually in Discord, and you can find the link in the description.